welcome to the next panel, which is mortgage lenders that embrace fintech. We're hoping that the next 30 minutes or so will be sort of informative and educational on what each of these platforms, enterprises are doing in the mortgage space. Unlike some areas that fintech have driven into over the last few years, largely underserved areas by banks, the mortgage lending space in Canada is extremely competitive. It's a sandbox that has historically been dominated by the large banks and other financial institutions. But in their own individual wisdom, each of these three gentlemen have chosen to dive into that competitive area. Won't need to introduce them. Their names are up on the screen, and I'd encourage you to hit their LinkedIn profiles to get more information. So without further ado, let's jump in. And Gary wants some controversy. We'll save that, I think, for the end, like David Fry did on the previous auto finance panel. So first question over to Damien. Damien, you've got an entrepreneurial background, particularly in the tech space. What attracted you to the mortgage lending area?
Thank you, Simon. I'm Damien. This is what 4 years of mortgages does to you. So what drove us to this market is, 5 years ago, 2017, we decided to launch Nesto, and it was quite crazy for us to think that there's no digital mortgage solutions in Canada at that time, right? There's literally no way to get a mortgage online. You can deal through your bank. You can deal through a broker. So we thought that white space is fantastic. We saw in the US and the UK and Australia, there were companies popping up and having a great deal of success. And it's pretty rare that you can build a $1 billion business in Canada alone. But the mortgage market, as we know, is quite massive. And the fact that we have renewal really got us excited about this. So that's kind of the capitalistic view of it, right, from an investment perspective. But the other side of it is the experience was really not up to par. I got a mortgage, soon before launching Nesto, and I just couldn't believe that, I had to go to bank branches to get quote rates, that I had to negotiate, and so on. So, we roller sleeved, we built Nesto. For those of you that might not know us, we are a fintech, an end-to-end digital mortgage platform. So we own the entire value chain. We have 250 employees. We've raised over 100 million in capital. We're originating billions of mortgages now here in Canada. And we roll our sleeves, and we thought, I guess that bet kind of made sense with the results from Nesto today.
Great. I have to compliment Nesto on the great commercials during the hockey playoffs. Absolutely loved them. Justin, your background's a little bit different. You started out in the US in the mortgage space. Why don't you give us a little bit of background on what brought you back to Canada and the mortgage area here?
Yeah, so I grew up here in Canada, and then I moved to the US to work at fintechs there, and I was lucky enough to be involved in a company called Blend that really had a important role transforming the US mortgage industry. So what we saw in the US was a lot of the fragmentation led to more competition. So we saw that traditional lenders wanted to embrace digital mortgage technology, and I happened to be at a company that was providing that technology, and it worked out really well. But in that experience, I had the opportunity to also serve the Canadian market, and the reception was a little bit different. But to me, a fintech lender is really, from a financial services perspective, offering the same products, or could be offering the same products, which in the case of Pine is we offer normal mortgages, but really using technology as the backbone of their experience rather than necessarily like people or process that you might see at a more traditional institution or moat. So to me, like fintech lenders embrace that from the beginning and allow their infrastructure to kind of allow them to scale really quickly. And I think Nesto's like a huge proof point of that. Pine, for context, is a company based here in Toronto. We're about 30 people, so not at the same scale, but we offer very similar products.
Great. And Mike, your platform's a little bit different than Nesto and Pine. You're at Canadian Mortgages, Inc. Why don't you tell us a little bit about CMI?
Great, thanks, Simon. So we compete in the private mortgage space. So that's for people who don't qualify for traditional bank financing. 100% of our volume is done through the broker network, though. So we're not a direct lender like Damien and Justin. So what we do is source mortgages through brokers For us, fintech space is really around two things. It's around speed and it's around validation. So anything that can help us get our response back to the broker as quickly as possible, 3 hours, 4 hours, turn it around 2 hours, give that approval. Then we move into the validation phase, and this is where fintechs can really help by allowing and assisting us to, is the customer who they say they are? It's everything around fraud, AML, et cetera. Then we get into the property itself, proving that the property is the property, it's worth what the appraisal says it's worth. And then we get all the very mind-numbing paperwork, getting digitization of paperwork where possible, and getting proof of income, proof of the assets that the customer has, everything to help get a close as quickly as possible of that transaction. And we'd love to be able to close a transaction fund a mortgage in a couple days. And really, it's working with the broker and their client to be able to validate these details. So having a third-party fintech that can assist with this really accelerates the whole process for us.
Great. Okay. And so just picking up on that, so you contract with a number of fintech tool providers. Then is that?
Yes, we use some today. Some have been on the panels earlier today. So, and we're constantly on the lookout for innovative new products that come along that will assist in that validation step.
Great, okay. So Justin, back to you. In terms of your experience, why haven't traditional mortgage lenders been able to digitize their mortgage lending process?
Yeah, so I think that, traditional mortgage lenders in Canada haven't digitized as quickly as other countries around the world is plainly due to the level of competition here. I think you opened up the session saying mortgage lending in Canada has traditionally been dominated by a few institutions, and that's totally true, and not my personal experience working in other countries. So when you have 1,000 mortgage lenders instead of 10, there's a lot more need to always stay in front of the customer and to always be as innovative as you can be, or you're going to lose market share, and that's what happened to the largest banks in the U.S. They lost market share. So I think I saw this opportunity. That's why I started Pine about a year ago, and I think the investor community has responded really positively to that. They see Canada as this interesting country north of the U.S., but where they're able to really invest in companies like Pine, and we've raised over $30 million just in that first year. And I think that it's because the competition isn't here yet, and people see that there's an opportunity to change that.
Great. Well, we're gonna focus on a new market entrant in a minute. But Damien, you've been at Nesto now just over 4 years as a co-founder. How have you seen the relationship between Nesto and, say, the banks develop over that 4-year period?
Yep. So I'll tell a little story, right? 2017, we launched Nesto. 4 guys with a whiteboard and a few ideas, and we're part of the Power ecosystem, right? Via many venture funds, and we were introduced to the banks in Toronto and a lot of the MFCs, and we went to them and we said, guys, we're going to build this digital mortgage platform. It's going to be fantastic. We believe this is what clients are looking for, and the answer was unanimous. One, it's cute, and second, we have a team of 150 people doing this already, right? We've been investing millions, tens of millions, sometimes hundreds of millions in our own digital solution. So good luck. We're doing it ourselves, and we said that's totally fine, right? Our main play is direct to consumer, so we did build all of our technology from scratch. So we have a digital application, document center, a full FiLogic, so underwriting platform on steroids that we've built. Same for advisors. We have a servicing engine and so on. So we've built our mortgage cloud. It's called the Nesto Mortgage Cloud, so it covers all of this. And I would say we kept the banks close, right? Banks are investors in Nesto via our mortgages. Obviously, we don't have a capital sheet to issue billions in loans, so we're close to the bank in that sense. But I think the market is really shifting when it comes to partnerships. All of those banks that we've met, they didn't release anything, and I think they know it, right? They've sunk a lot of cost in what they've done. So I'm proud to announce, this is going to be public quite soon, but Nesto is going B2B as well. So we built our technology in a way that we can white label that technology. So there are banks that are looking into doing that, right? So outsourcing their mortgage technology to Nesto, using their people or using our people, that's still up for debate. But I think the banks that missed the boat on building it themselves, they really look forward to partnering with Nesto.
Great. Well, we look forward to that looming announcement. Mike, back to you. In terms of the inevitable fintech versus bank relationship, what would you see as sort of a leading catalyst into being able to compete more sort of on a level playing field with the banks? And in particular, I know other panels have talked about open banking. Why don't you just address that a little bit in your area?
Sure, thanks, Sam. So I guess I've worked for most of the banks. This is what 25 years of mortgages looks like, so sorry.
25 years of law.
Law and mortgage look the same. So I'm excited about open banking, and I know there's a lot of people in the audience that are going to groan because it's taking so long, and Canada is definitely behind the rest of the world, and that's unfortunate. Having worked in banking, just to give a quick analogy, so we use Flinks. Flinks is great. I think it was said this morning everyone should use Flinks in the one presentation. We're very happy with the service. As a banker, I hate screen scrapers. So we sit around in the bank and you can see when the various screen scrapers are coming in to your customer.
Let me stop you there for a minute, because you used screen scrapers on our call, and just why don't you give me a little background on what
this is where a customer will authorize someone to get access to their banking information by sharing their credentials. And then the third party gets access to the banking information. The customer agrees to this, so there's nothing wrong from that point of view. As a bank, when I'm a bank, it's very perverse because in one part of the bank, you're spending all your time telling customers never share your credentials with anyone. If you do, you're invalidating your online security guarantee. And then that same day, somewhere else in the bank, they're going to be saying, hey, you're applying for a credit product. We need to get access to this information. Please provide the INSA. Or quite commonly, we'd like to aggregate all your information. We have this great tool that you're going to be able to see all of your financial information in one spot. And you just need to give us access to this information. So within the banks, you actually have this conflict of one area saying, don't do this. Another area saying, this is great and we should, you should want to do this. The customers want this. The customers want the greater value that being able to do these sharing of information, they just can't do it today because open banking isn't there. So I'm excited by open banking coming along. This will absolutely help to level the playing field for competitors in the industry. I also think, as a customer, this then allows me to monetize my information. Right now it's being monetized by the banks or a few isolated providers. This allows me to say, okay, I'm going to share my information with Simon, but in exchange for that, he's going to give me this nice dashboard that's going to show me everything and maybe some AI around you should change your investment profile based on this. So for me, I think, as open banking slowly gets there, that's going to help to level the playing field.
Great. Can I ask the same question, put you on the spot, Damien, because I know in some of our discussions leading up to this panel, you were less enthused about open banking as it relates to Nesto, and then Justin, I'll put you on the spot as well.
Thanks for that, Simon. The reason we're not that bold on open banking is not because we don't believe in the concept. It's just when you're a startup, 6 months is a lifetime, right? So do I believe that regulators will get their ships in a row and figure out open banking and make it accessible and API driven and so on in 6 months? Absolutely not, right? So we keep aware of it. Our chairman is on the board of the advisory council of all those things. But quite frankly, open banking is not the solution in the next 6 months, right? So you gotta pick your battles, focus, and execute knowing that.
Great. Justin?
I think I agree with a lot of the same things, but I've actually seen the long-term impact of the success. So in other countries, particularly the US, open banking has been accepted to the point where the mortgage market will take that in as a valid source of income or employment verification. And that's a long-term change that did have a significant impact, meaning less documents for borrowers, less paperwork for lenders to look through. And I think it does have a really strong impact. Now, my opinion is similar. It's not something that I see changing here immediately to the point where it's going to affect our roadmap and what we're focusing on. So as much as I would love it, it's a lacking part of the market right now. I think that the things that are immediately addressable, there's a lot of things in front of us that we need to fix right now that people in the mortgage lending ecosystem are dealing with, especially in this environment. So for us, I don't think open banking is at the top, but in the long term can really improve efficiencies for everyone.
Great. So that's a nice segue when we're talking about environments, because we are clearly heading into a uncertain environment with rising interest rates. Mortgage lending is impacted like other lending areas when interest rates go up. Mike, question for you. You're the banker of the group. How do you see sort of the rising mortgage interest rate affecting the mortgage business going forward?
It's not great. So the mortgage industry, as most lending industries, are impacted by rising rates. So, the sharp increase in rates decimating the industry quite candidly. So as a quick example, I was at a private mortgage conference last week in the US, and they started the conference off. The MC's got, here are the 15 sponsors, right? Want to thank them all, but also acknowledge that 5 of the 15 had gone bankrupt that month. So that's how quick it had turned, that people had enough money to sponsor a conference a couple months ago. Fortunately, the checks had all cleared and everything, so we still all had our free drinks. But 5 of the 15 sponsors had gone bankrupt in the past month. So the rate increase has decimated the mortgage industry. Volumes are down substantially, and so you have less volume. Everybody's cost of funds is up 350, 400 points. So, you're getting hit on both sides. And then for those who have an existing book, their security has gone down. I think Canada is now down across the board 10% or more. Expectation is another 10%. Sorry to all the economists in the audience. I'm not an economist. This is Mike's opinion of one. So, your security is down 10, 20% as well. So it's really troubling on the industry side for mortgage lenders. If you're a fintech who is providing services to this industry, you've got it sort of on two sides. So the first panel this morning talked about doing a raise during a downturn. Hopefully everyone's got enough capital to get through the next 12 or 18 months to whenever rates turn, because you need to be able to get through. At the same time, you're now trying to get new business out of customers where the mortgage providers are quite candidly keeping their powder dry. So you could have the greatest product in the world. Your potential client may not just have time to do that in the next 12 months because they need to keep every dollar they have to get through this crisis. Now, not to be a downer, every time this has happened in history, the firms that make it through the dislocation or the correction, then there's hay to be made at the end once rates start to turn around, the market comes back. For the firms that make it through this period, there's a great opportunity coming to then really grab market share once the market comes back.
Right. Yeah. No. Good. Very good point.
Can I rebound on this one?
Yes.
Simon?
I was just gonna.
It's really interesting.
Pass it over to you.
The for us, it impacts our business in so many ways. It might sound counterintuitive, but we had 6 rate hikes in a row, right? Like 6 Bank of Canada announcement rates are going up every single time. There's another one in December. We actually did really well during that period because we helped our clients because we control the end-to-end chain. We edged a lot of volume. We're the only lender in Canada that offers 150 days rate hold, and we've really done fantastically well. Unfortunately, that final rate hike, I think, with seasonality, is going to bring a significant downturn to the market. Like next year is going to be extremely difficult for mortgage lenders as a whole. So as you mentioned, like being responsible with your capital, making the right decision, right, focusing on efficiency, client experience, I think is the way to go, because next year we'll all be fighting for the same pool of client, which will be shrinking quite a lot.
So we may not see those commercials on the hockey playoffs again next spring. Justin, your thoughts on that?
Yeah, I think it really is kind of a fundamental reset that needed to happen. And with rates higher and not every single person taking out a loan, it's really going to separate the providers in the industry from those who have a solid business and have the room to grow and to be stable throughout these times. And I think you are going to see a lot of hardship for people who might not be as well capitalized and don't have liquidity. So I think like coming out of it though, you're going to see really strong players. And I think we still really believe in the creditworthiness of our borrowers. We think that that this is okay. Maybe people aren't stretching themselves as hard to do transactions as they might. Like there was a lot of FOMO in the market last year, and we definitely saw that with people coming to us to get products, and you don't see those same people coming out now. So I think it's a natural reset. I think next year is going to be hard, but I think for people that are in strong positions, like all of us, we're going to make it out, and it's going to be okay at the other side, and it's just a cycle that has to happen.
Right. So a few minutes ago, we spoke about new market entrants, and one of the leading, if not the leading, U.S. sort of digital mortgage lender, Rocket Mortgages, announced that they were entering the Canadian market. Justin, when you see a large U.S. competitor enter into an already competitive market, a difficult sort of mortgage lending environment, what are your thoughts about that? They've got deep pockets, the ability to scale. What's your view?
I think it's absolutely fantastic. To have more competition is great. That's always what Pine's about. One of our kind of key points of starting the company was if everyone's getting a mortgage from a large bank and none of the large banks offer an online experience, that means nobody's getting an online mortgage at all. So if more people are doing it online, I think it brings more opportunity for us, brings more opportunity for Nesto. The consumer's going to change their sentiment. They're going to start exploring options. Just to kind of piggyback off the previous questions, a change that I've seen in the market now is I think Canadian borrowers are really like sharpening their pencil. They're not like immediately taking the renewal in that like mail-in offer. They're actually saying, hey, is this a good offer? So I think with more competition, it's positive for the country, it's positive for us, and I think to Rocket's credit, what they were able to do in the U.S. market is tremendous, although I do think they're number 2 now. UWM just passed them like a week ago. But we're all for it.
Great. Damien, same question?
Yeah, I mean, it's not a surprise, right? Like, they funded Edison, a direct brokerage, 3 years ago, so you could have said Rocket is in Canada for a while, right? They rebranded this year with the pretty big crash that they've had on their stock, right? So all the Rocket assets around the world are now Rocket. That's me downplaying it a little bit. Our VP of sales is from Rocket. These guys are serious mortgage people, right? Like Rocket in the US is the largest lender, right? Quicken Loan, Rocket, same entity. Like if you're a bank and you're not considering digital mortgages, and Nesto is in the B2B space now, like I think you're missing out, right? Rocket should be a threat, right? To not to take too lightly.
Right. So this ties into another question I wanted to ask you, Damien. We're talking about consumers sort of moving online. More competition is healthier. It'll drive more people online to see what other offers are out there. What have you seen over your 4 years at Nesto in terms of changes in consumer behavior?
So I think the assumption that you may have, right, with a digital experience is, oh, it's going to cater to, people my generation. What we see in our data is actually, our clients base range from, 18 to really like 55, 60, right? Like everybody today, especially with COVID, right, is comfortable getting on a Zoom call, doing things online, right? We have a very omni-channel approach, so I talk a lot about digital, but a lot of the secret sauce is in our sequencing of advice and how people get in touch with the client, in a very fast fashion. And I think, quite frankly, like, I know you, Simon, personally, I think you'd be totally comfortable doing business with us, right? So there's really no more boundaries in who online is for, right? So that's a shift. And with COVID, I think everybody got comfortable with technology, so we only see it growing.
Great. Okay. Well, we're getting down to our last few minutes here, so I thought we would just sort of throw one more question to each of you. So let's fast forward and look into our crystal ball at next year's CLA conference. We're talking about mortgage lending again. What would the issues be that we're talking about? And Justin, I'll start with you.
I think it's going to be the recovery of how a lot of people made it out of a period with a dramatic increase. It can't keep going up forever. Everyone's watching the inflation numbers, but Honestly, I have no crystal ball. I could be completely wrong, and I think that's what's so interesting about the kind of environment we're in right now. If you just look at the one last year that we had, how many things changed? There's a new war. We're out of COVID now. So many things that you couldn't predict changed. So personally, I think it's impossible to tell.
Safe answer. Mike.
A year from now, cross our fingers, and we'll be starting to talk about interest rate decreases. And then the mood in the room will be very different. It'll be the opportunities everyone's looking at as the market starts to recover, and how can people grab those opportunities. So, we won't have the kickoff session being how to raise during a downturn and all the issues about you can't get. What was the one, sorry, I forget who mentioned it, but someone said there's no equity raises right now available. Yeah. So hopefully the entire tone of the conference has changed to opportunity from risk mitigation.
I echo the optimism.
Damien?
Yeah, not much more to add. I think the ones that will survive this next year will be in a fantastic position, right, to ride the wave that is going to come right after this. But it's going to be a tough year, right? Like, I wouldn't want to be a mortgage broker and a realtor, self-employed today.
Great. Well, with that, we're going to be a few minutes early, but I'd like to thank each of the panelists. Anyone looking for a mortgage, please look up Nesto, Pine, and Canadian Mortgages, Inc. For your best rates. Anyway, thanks very much. It's been a pleasure.